All right, so today was a Wednesday. Today was Wednesday. You know I don't like Wednesdays personally for trading. The strategy I employed the strategy again today. It didn't work out for one trade. So the strategy is basically you have the three line strike and you also mix it with a bearish engulfing or a bullish engulfing to kind of give you more confluence to the strategy. I employed the strategy today and it did not work again. But then I see where you could have entered on some probably bullish engulfing or also a bearish engulfing and made some money. However, I entered today off Fed news, which provided me some profits, but ended up having two trades today, one profitable and one loser, because I had used the strategy and the strategy was wrong again. So let's just work on the strategy again and just see if we can fine tune it or find where it is more consistent. Or I'm just gonna keep employing the strategy and to see how what's the win rate of the strategy personally with this ticker as well because I'm trading it on the QQQ, right? So let's get into it. So my first trade was around here at 12. It was close to 12. So during the day, I'm not sure if I saw that it was creating this bearish engulfing and also three line strike strategy. It must have been a reason why I took it. I'm not clear as to why I took it right now, but I'm thinking it was probably rejecting off this daily level and then it started to form that three line strike and bearish engulfing pattern, and I just decided to take it to the downside. And remember that I found this much easier way, much easier way to drop the chart is gonna save us a ton of time. So I entered, if you minus 5 from this, basically I entered on the 11:45 candle. So that's this one, and then you just basically um fix the properties of this, fix the coordinates. So I entered at 293.88, 293.88. I'm doing it this way because yesterday I had my cameras hooked up to the hotkeys. So anytime I press certain numbers, they actually moved some numbers, right? So I entered 293.88 for 100 shares. So I go with 100 shares just about all the time. So that if I have a $2 move, I'm making $200. If I have a $1 move against me, I lose $100. But my risk is usually $100 to make 200 or 300, right? So this is where I entered to the downside. So I could see it pushing down there. And then you also had this bearish engulfing and three line strike pattern form. But it ended up closing me out for my stop loss at 29480 at on the 11 on the 12:15 candle. So let's look for the 12:15 candle here. So this is the 12:15 candle, and we just fix the coordinates of this to 294.8, right? So this is where I got stopped out. So I entered here. Generally, my stop loss would be like 294.88 or 294. Yeah, exactly 294.88, which would give you a loss of like probably exactly 100. But I went to 294.80, which kind of brought my loss to 93.50 on that first trade, right? So that was the first trade. It was a losing trade for the start. The second trade was when the Fed came out with their news. So it was slightly after 2 o'clock. I could see this candle forming. So it was on this 2 o'clock candle, right? And then I entered at 29466. And then I'll show you the news that I actually just got a glimpse from that Bloomberg just gave you a snippet. And from that, I interpreted that the market would have pushed down off of that news. And I just had my stop loss at resistance level, right? So I entered here at 29466 on the 2 o'clock candle, and then the market pushed down, and then I closed it out. I actually had my stop loss, my take profit at 292 exactly, but it didn't go that low. It went down to 29377, and that's when I just decided to take some profits. and that was at 3 on the 315 candle. So let's look for the 315 candle. So it was basically this candle when it was starting to reverse, and then I closed it out at exactly 293.77. This makes it much easier, saves me time. I'm not fooling around trying to get the right coordinates here. Right, so this is where I enter to the downside and close it out here. Ideally 293 flat would have been my best out. 293 flat would have given me like probably 120 on the day for that. So I had two trades. One was a $93 loss. The second one was a $87 profit. Right, and this is where I entered to the downside. This is where I closed it out. And I'll show you that the news that I actually read from the Bloomberg. I don't subscribe for Bloomberg because Bloomberg is probably $1,500 a month or something, so not yet for that, but that's something I'd want to do in the future. But basically a snippet of the FOMC minutes that happened today. So they basically summarize it, and they said Federal Reserve officials continued to anticipate further increases in borrowing costs would be necessary to bring inflation down. Borrowing costs can be interest rates. So they anticipated that, and they see it would be necessary to bring inflation down to their 2% target when they met earlier this month, though almost all supported a step down in pace of hikes. So essentially they're saying most people are agreeing to 0.25 hikes going forward, but they're probably not seeing a pivot during this year. No pivot, no rate cut would mean stocks really have no reason to go up. The only thing that's going to probably go up is the yields on bonds. Yields going up on bonds means that the interest for bonds would go up because you're getting like a safe 5%, 6% versus putting your money into the market and probably risking losing 50%, 20% to make 10%, 9%, etc. Right? I'm also going to read this article from CNN. So CNBC. So CNBC has a title, S&P 500 notches fourth day of losses after Fed minutes reaffirm tough stance on inflation. So the article reads, stocks ended lower on Wednesday as traders parsed through a summary of Federal Reserve's most recent meeting, looking for clues on the central bank's next move against inflation. So that's basically what the market is doing, is reading through the FOMC minutes and trying to anticipate what the Fed is going to do. So if the Fed is going to hike, they try to sell off, lock in their profits. If the Fed is going to cut, they will just run it up and people try to make their money before the retail traders get in. That's how big money moves. They try to make the move first, and retail or the smaller money tries to just kind of chase the tail, right? So the Fed's minutes showed inflation remained well above the central bank's 2% target, adding that the labor market is still very tight, contributing to continuing upward pressures on wages and prices. So they're basically saying that the Fed wants inflation to get to 2%. They're going to do everything in their power to get inflation down to 2%, right? To get inflation down to 2%, the Fed only has one tool: moving interest rates, whether it be up or down. So that's all they can do. They can either tighten inflation rate more or they can cut it and boost demand, right? The Fed officials also noted that inflation data received over the past 3 months showed a welcome reduction in the monthly pace of price increases, but stressed that substantially more evidence of progress across a broader range of prices would be required to be confident that inflation was on a sustained downward path, right? So they want basically all things they're measuring for inflation to be coming down. So they want to probably see housing come down, probably rent come down, food, energy. Even if they don't have any touch onto those factors, they are going to try to touch those factors reversely by affecting the demand. So by not having people being able to afford such things. They're trying to affect the demand by people not being be able to afford. The company has to drop prices in an effort to kind of get people to buy. Similar to what Tesla did. Tesla has pricing power, right? But in an effort to get people to afford the Teslas or to keep that demand going, they could cut prices, still make profits on their vehicle, but they could still keep demand going. But if you and cut demand reversely, you would have to cut prices to increase demand again. It's just supply and demand, right? So the minutes were released after St. Louis Fed President James Bullard cautioned early Wednesday that the central bank's fight against inflation is far from over, right? So that was mounting concerns that the Fed will continue hiking rates, spooked investors Tuesday and pushed stocks to their worst day in 2023. So that's what happened. So if the market thinks that the Fed is going to continue raising interest rates, it's going to push down. But that's basically what I have for you today. It's an 11-minute video. Hope you enjoy it, and I'll see you in tomorrow's video, right? That's basically what happened today. I'm gonna employ the strategy again tomorrow and see if we can find a way for more nuance. So we want the strategy to work more, right? But I'll see you in tomorrow's video. I hope you like it. Hope you enjoy the journal. Bye bye.